Hey guys, ladies, gentlemen, friends, we are back. So, lesson 3, we're going to go into the daily markings now. So we've done the weekly, it's quite straightforward. I hope by now that you've gained a little bit of clarity on time frame independence. The whole spectrum, time frame wise, top down, we want to approach it in a manner. Again, some of you may know this, some of you may not. We will always want to go from the time frames above, below, above, below. So what I'm trying to do here, what I am doing, okay, is giving you structure and specific steps to follow on specific time frames. For some, as you go through it, you might think this is so easy. Trust me, okay. By the time we marked up all of the charts and we can see intraday price action rolling, and then I've got ongoing videos afterwards, boom, 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 trade, 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 you'll see how the simplistic factors aren't so easy to get to. Okay, it's only the way I'm trying to deliver the information. Hopefully I'm doing a good job so far. But you see overall how having structure and creating a web from high time frame into lower time frame and having specific steps and limitations, if you will, i.e. a limitation on the weekly is only plot 4 levels, no more. That's my key limit on more or less all of the levels and zones plotted on weekly, daily, 4 hourly. You'll see as time goes by. But it's all about having the structure and eradicating bullshit out of your head. So with the weekly being done, what the heck? My hands all red. I think it's mouse. Too much clicking, bro. Alright, so let's go into the day now. So GBP AUD on the day. Let's see what we can gather from this. Now, daily, I did mention on prior videos, tool-wise, horizontal line, I only use that on the weekly time frames. We've translated information from the quarterly into the monthly, into the weekly. Now we know on the week, right here, we have high and then low. Then we have alternative high, alternative low, if structural levels do break. So at the moment, we're more or less trading in this region, but then we can refine it. Now we're going into daily to refine previous areas of structure where we can potentially base trades from and to, because it's not really realistic going, okay, let me sell pound and then just hold it to here. It's going to do so many things in between. You know, we don't place or execute trades on the monthly or the weekly, especially not the quarterly. Daily, 10 p.m. London time is when the market rolls over. I do my analysis at 10:30, ready for the next morning. Sometimes I would say only maybe 10% of the time will I find a daily setup which I'm happy with, and I might go in for if that day candle, whatever, provides the information necessary for me to jump on board, long or short. Other than that, I will be up early in the morning, 5 a.m., 6 a.m. to look for intraday or intra-week setups. Alright, so with the day, all we're going to do on the daily at the moment is we're going to look for, number 1, we are going to draw on our levels on the day with the horizontal ray. Now, take notes. The weekly was from the wicks of the candles, right? If we go back, you know, wick to wick, we found an area, peaks, troughs, valleys, we went from wick to wick. Here's that wick there, to that wick there, that wick there, to that wick there. Here, we're going for the bodies of the candles, okay? So, follow me with this. Bodies of the candles, we see 1, 2. We need 2 candlesticks, flat body, boom, there's a daily level. What we can do with that, I think mine's a little bit thicker than anticipated or expected to be. We can just put it, okay? With this scheme that I've got going on, because I'm quite OCD when it comes down to charting, I've just coloured my horizontal ray the same colour as my wicks, evidently, right there. You guys can do the same. So I keep my weeklies black, I have my dailies blue. 1 second, let me check this GA on my phone. It's not really giving me too much to work from right now. I'm more or less monitoring a potential trade setup, which after the rollover of tonight, when I do my analysis at 10:30, I still have 5 hours left. There could be a setup there for the Asian session. Times and routines, I normally set an alarm for like 2 a.m. as well. If I'm in a trade and I need to check news, perhaps if it's GA, I will go in and always just wake up beforehand if I need to close a position. If I'm happy or comfortable with profit so far, if I'm in loss or I need to modify, take some off the table or bring stop loss up past entry, or that's all trade management. Just throwing it out there. Some of the lessons above about trade management, that's the basic structure of it and how I work it. But I'm going to be showing you different ways of position sizing to maximize your gains. It's more of an advanced structure and theme, if you will. But yeah, I'm just looking at that at the moment on GA currently. So here, guys, sorry to go off track there. We have body, and I can clearly see, so we have the weekly above and then we have the daily here, yeah? Going down, look to the left, okay, we have body. Why is this out of alignment? Because that's the gap. That's the market gap up, drags down, boom. So what I'm going to do, I'm going to take these two bodies. You're just looking at two candles. Whoops, might have selected the tool there. Whilst I'm doing this, also just be mindful of psychological levels. So over here, I'm not going to move it to the psychological level. I keep it flat base on the body. Here, 1.8450 right there, and then down here we have 1.8100. So 1.8199, which is basically 1.8200. So again, psychological levels. If we are near one, it does. You can see where price is reacting from that anyway. Here, boom. This is also 3-pin pattern, 1, 2, and 3 in 5 hours. If that closes that way, we have the 3-pin pattern. We have today, zooming in, because look where I've drawn that level from. Thursday, Friday, Monday. We've retested that area, and now we're pulling back to the downside. Secondary confluence there is that, we've got 3 confluences. 3-pin, 1, 2, and 3. We have a gap down, a retest of that level, which I've just spotted and drawn on. And we also have the market is now clearing and taking out the previous wick momentum. So it's kind of making up its mind right now on GA. That's not to say that it can't pull back first, give us another test and then drop, because price action on GA at the moment, especially with the fundamentals and the Brexit talk, is a little bit all over the place. So I haven't looked at the news for the week ahead. I've been very busy this morning. I wanted to jump on and do the videos, but I'll do my proper analysis tonight and see what's out, see what's ahead, and then obviously zoom into lower time frames to see where I can maybe capitalize on maybe a pullback then short or whatever it may be. So over here, this is my next downside level. Now 8200 from current market price is 153 pips away. 153 pips. Just to mention also that the candle of the day hasn't formed yet. I've got 5 hours left of price action. So this can form all the way back up to the top, and I can change everything. It could still maybe be a 3-pin formation, 1, 2, and 3. However, it might not take out the momentum of the previous Friday's candle. I would like to also note Mondays can be a little bit skeptical, if you will, when it comes down to market bias and direction. I like to do my analysis at 2 p.m. US session start, London time, 2 p.m. on London, because when the gap comes in on the Sunday evening, if there is a gap, what we'll often find is the market needs to more or less find its feet. All the gap trading and stuff like that, it's hit and miss, to be honest. It really is fucking hit and miss. I'm not interested in it whatsoever. What I'm interested in is staying out of the way until the market finds its feet, comes into the US session, and maybe gives us something for Monday. If the market's relatively dead on Monday, we might get a great Tuesday, Wednesday, Thursday. Maybe bonus Friday. Depends on the cycle of the week. We'll get into the cycles afterwards. Alright, so that there for me is great. And you know what, guys? Like, I don't need to go all the way back in time. When it comes down to especially the daily and the 4 hour, I'm only really looking at the previous. If it's a day markup, I'm looking at the previous like few weeks. Like this spectrum here is fine for me because of the target projections we're going to be going for in the market. Just as an example though, as an example of one more, I'll be looking down here. What I'll be looking down here for is, see the bodies? You know, we have this area, 7950. That would be quite interesting for me because I can see we have 3-pin pattern, 1, 2, and 3. That there, obviously it's made its low on the lower time frame, popped back up, momentum's boosted all the way through that weekly zone. And I don't want my levels too close to each other, so do not do this. We have the weekly and then go, oh, there's a daily. It's confusing as hell. Come on, we need to like give some space in between each one so it's not a case of analysis paralysis. And you know, we've got millions of lines on the charts. We can clearly see what's the weekly and why, and then we can clearly see what the daily is and why. Daily bodies, weekly pins. All right, so as a scope, I'm only interested in this. So we've broken the chart down from, look, 3 month, crazy, monthly, crazy, weekly, insane, okay? But now we've gone into the day, and now we know where we can more or less trade to and from. As I was saying, 8.2 into 8.360, 8.350, that's 150 pips. Oh, sorry, 150, 160 pips. I hope I said 150 earlier on when I did first mention it. As I say, there's so many numbers today. I've been doing so much work. Like 4 pages of just straight writing, journaling, and putting these videos into order. It's getting a bit late here now. So anyway, that's the scope there. Now, the bias for GA is potential pullback. We know the market can potentially pull back into this region. Once it does get to that, I'll be satisfied with a potential trade setup. This is where it all comes to life on the 4-hour and the hourly. Alternatively, you know, we can break this zone, and we could potentially fly into the zone above. The other pattern to recognize here, okay, and you're going to see this quite a lot, is the 3 drives. All right, drive, 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 drive. Boom, high, run off. Boom, high, run off. Boom, high, run off. So what we're more or less expecting is we've seen one on gold. If I can just go in and look at the day on gold. So looking at the daily on gold, we had one. Look at the velocity of the wicks, and you can see just like the pure fucking liquidity that's just getting spiked in, spiked out, spiked in, spiked out. High, 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 third high. Even though this is only by a small amount of pips, ticks if you will, whatever you want to call it, pips on spot gold. Boom, market then pulls back, relieves itself. Boom. So we're looking at this pattern, market, boom, relieves itself, and then continues. We will see. I'll go into this. You see this on every single time frame. I'll go into it more or less later on in further detail. Now, that daily markup for me is perfect. What I'm now looking at, I can zoom into the chart. I do always suggest what our mind needs to be focused on is candle by candle by candle by candle. Okay, let's look at this in color. All right. So if you looked at this in color, there's so many tricks here. Shooting star, boom, back up, bullish engulfing. We have the hanging man, then we just have a price breakdown, bullish engulfing into that weekly area, bearish engulfing, trap. Here, bullish engulfing, 3 pin, okay, successful. However, pulls back and then finally breaks through bullish engulfing. It's hit and miss. It's hit and miss. What we're trying to do again with we're trying to eradicate hit and miss. We don't want to be hit and miss. We want to be success. Hit and miss is for babies. So by the time you've gone through all of this material, and you know, up until Christmas, as I'm going to be uploading all my trades, you guys should be in a completely different sector in your trading, in your element, in your mindset, in your clarity on the charts, in your chart hygiene, everything. Okay. Right. So straightforward, A to B, potential. I've done 4 levels on that. I don't need to go into it anymore. If I was to go upside, into the upside, I would look at this price breakdown over there, and I'll say, okay, cool. There's the bodies, there's the regions, and again, see the space in between. There's space, and you are going to find this here. Okay, that could react, but it is quite. What, 100? That's 62 pips, 70 pips. It's too close. This is something that comes over time, and with my guidance, you know, you build on it. But it's kind of common sense too. If you layer up so many levels, near levels, it's like, okay, cool. If your mind's thinking, where should I take profit? Here, 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 here. Where should I take the trade from? It's a general rule of thumb, I think, should be like you shouldn't have a daily next to a weekly 120 to 150 pips. Space it out. Space it out. So that is why I went a bit nutty when it came down to the August trading on Twitter. I was doing so many different trades. I killed that month. That's probably one of my best months, actually. I did it publicly. But now, once I'm retracted and I'm back behind the scenes in my own space, GA in gold is all I'm looking at. And I'm locking down trades on 15-minute time frames to hourlies. If a 15-minute time frame trade, if I'm watching it then to see how the hourly forms, how the 4-hour forms, I am then seeing, okay, can this intraday trade quickly convert and be converted into an intra-week and swing trade? It's a dynamic process. It's not, okay, here's a strategy, knock yourself out, good luck. It's you have to use your brain, man. You have to be in sync with the markets. You have to have that intuition. You have to have I'll do a video on this. Let me just write this down, actually. I've just got an idea. One sec. Sorry. I've got an idea for one of the psychological videos. I'll save that for the next vid. But anyway, as I was stating to my screen, hopefully you're still listening, we need to just keep it concise. It's not that difficult. It's not that difficult. Cleanup process is here. Okay, so we've done the weekly, we've done the daily bodies, wicks, weekly wicks, daily bodies, weekly wicks, daily bodies. 4 and 4 maximum. We have 3 here. Okay, no, then I found the 4th one, but obviously if we couldn't find a 4th one for the current price and state we're in, if it was like a mass consolidation phase, do not try to force it. Believe me, just allow it to be. So now my attention and focus has gone into this region, into this range. I could trade from here to here, then here to here, and boom, we could go out and then maybe extend upper price regions, targets up to the highs, or we could break down price, then go to here, then go to here. I have all of what I need in this region, okay? Successful trades will come down to not being too overly ambitious, having proper setup when it comes down to the levels, having clarity. So this is why if you start on the 3 month, as I've already explained to you on the other videos, lesson 1 and 2, make annotations, explain, write a story to yourself, what you see on the 3 month, combine it with the fundamentals in the course. Look at what's potentially going to be ahead, where price needs to go. Save it, put it in a folder, write some notes. Weekly. Transition into the weekly. Label the weekly time frame as to why you've put the levels there. Why this? Why that? Which psychological level can you see it being near to? Boom, cool. Save that. Any other notes? Put it in a folder. Candlestick formations inside bars. Again, this is stuff that I'm going to go into afterwards. After you finish the whole concept of this material right here, you can then go back in time and improve. Daily, 4 hour, paint a clear and concise story to yourself. It's only you and the market, you at the desk, at your computer. Nobody's going to pat you on the back and say, good luck, mate. Come on, mate, don't cry. It's only a loss. You have to be in this by yourself. You have to paint a picture to yourself. You're talking to your subconscious mind when you do this stuff. So easy said than done, but if you're stubborn and you don't listen to me, believe me, it's the only thing that actually is my first corner that I turned in trading when it was, okay, cool, you know what, let me stop focusing on trying to make money because I'm becoming a gambler and it's an addiction. All of this stuff, again, is in psychology. But let me actually take pride in the charts. Let me, get intimate, so to speak, without being too cheesy gay, with the charts, and let me understand why it's going to move from A to B. Once you've done that over a period of time and you have that record there over, let's say, 4 or 5 currencies, you can then go and pick the currencies you're the best at. Get rid of the ones that you're not so good at. It's called refinement. Then once you've refined that, then you can go into, okay, this is exciting, it's fun, it's working. Confidence then builds. Once you have confidence, put the trades in. And you can surpass 5 years just by, going through that 4 to 6 month process in an instant. And you can be ahead of the crowd. Anyway, again, there's so much information here. There's so much information to come. just bear with me. Anyway, that's GU. My mind is focused on this area, on this zone. 8450 key area, daily, weekly. Cool. Let's move on. Let's break down gold. Gold daily here is quite straightforward because we already went into the week, and what we did on the week is we broke gold into a massive consolidation range. 1550. We know if that breaks, where we're going to go. 1620. Right. What I'm going to do here on gold daily is look at the bodies, the highs. So what we want to do, again, don't be scared to actually just go in there and just fling things on and have a go. Right, now 1542, that's 80 pips, 70, 80 pips away from the higher tier. However, because it's gold and not currency, I'm going to allow that one to slide. I did say currency is 120 pips, 150 pips away from the key zones. On gold, I would say 50 to 80. That there can still be a huge key reaction point for this metal to come into and then dip lower. What I'm also looking at is current market state, market price right there. Look at this. See the high that was boom, breached. Market comes in after a huge rally, taps into that region, 1525 to be specific, and then bearish engulfing comes in, price breaks down, consolidates before going higher. Drive 1, drive 2, drive 3, relief. Here, there we go. Look at that. Beautiful. It lines up with a 3 pin here, 1, 2, and 3. Price exhaustion, bullish engulfing, tap back into that region. Once the price breaks down, we boom, come back into that area. Resistance, resistance. Is this now resistance? I did say gold can roll over. So put that there. That comes in at, what's that come in at? 1522.8. 1542.4. Downside, guys. Downside. So what I'm looking at, I know this area is a huge consolidation range. We could probably manhandle that on a lower time frame, to be honest. But over here we have body, 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 body. Now let me just see if my crosshair can line up any of these bodies with the current market state. So if I put that one on there, 1, 2, that was our more or less region, tweezer bottom before the bull break. So I know that's quite an important point because I can see a lot of wicks and a lot of, there must have been a lot of order flow around here, a lot of profit taking from especially this move. This is why the wicks are being left behind. And then we get the first test, secondary test, third test, and then rebound. So I'll take the third test there. Going across, we can see that it doesn't really match up too well with this high or this high. However, if you see, again, focus. Use your mind to just focus on what price is doing here. Price, okay, mess. It breaks above, breaks back below, breaks back above. We test that region and then spikes off. That breakout again takes out 1, 2, 3, 4, 5, 6. No, sorry, 5 candles. So momentum comes through sharply. What also happens before that is the weekly is tested. But this is the 1 and 2. That's where the weekly was plotted. Okay, so I can't really use that as an excuse. But what I can say is market comes back above and starts breathing above. That's why you have to be so precise and zoom into your charts. Zoom in, like over here. Fucking put that shit on the body right there. Look at that reaction. Right, gold for me, done. If we were to break down lower, I would probably look at that. Body, body. Tap, tap, breakthrough, so on. And again, if you guys just go through and you just go candle by candle, right, look at that, and then put the colors on. We're looking at breakthroughs, we're looking at candle bodies, structure, order. Once we're finished with all of this stuff, and again, it's just going to be a rolling like commentary, so to speak, of certain trades that are placed and stuff like that. But once you have the foundations with the black candles and the wicks, it's going to be like, oh shit, okay, cool. Because if you put the colors back on, it becomes quite confusing as to where the bodies are, okay? But if you program yourself to just follow me for a while, your trading take my psychology advice. You have to go through your own mistakes, but your chart work is going to become so much cleaner and you're going to have so much more clarity. It will probably, I'm not going to say guarantee, but you're going to open up some new worlds and you are going to get better results with this. Everything I've done in the last like 2 years, I've put money behind it and I've tested. I'm not talking like a few thousand, I'm talking hundreds of thousands. Hundreds of fucking thousands. To get to this point in my journey, you know, the chart work is one thing, but the psychology is just like, my psychology is crazy. Once you go through all the psychology videos and you see, you know, what I've really been through to get here, a lot of people don't really understand, you know, what I've gone through or anything like that. But when you go through that psychology and you actually hear out my stories and what I've actually overcome in this market, you'll see that I ain't playing no games. I'm not playing any games. So again, just take my advice for now. Okay, cool, guys. Look, that's fresh. That's clean. Currently, okay. So scenario-wise, gold here, depending on the daily closure in 4 hours, we can maybe rebound and pull back, or we can break through. Critical level, critical zone. I can't really tell too much just from this daily time frame in particular, but then we'll go into dissecting the lower time frames. Lesson 3 is over. I'm going to go into lesson 4, breaking down daily on pound, USD CAD, go back, take notes, and then afterwards I'll wrap the daily and the weekly up with a video explaining more about the candles and what to look for in alignment with the levels that we've just plotted on. Thank you.